ever wondered if an AI could actually beat the market? I mean, really beat the market. Not just by a little bit, but by a country mile? Well, we're about to find out. Let's dive into the results of this autonomous AI fund and break down exactly how it pulled off its latest iteration.
All right, let's just get right to it. No messing around. Since the last big rebalance back on March 3rd, this AI-managed fund is up, get this, over 17%. Now compare that to the S&P 500, which in the same time frame is up just 4.4%. I mean, that is just a huge difference. It's an absolute blowout. So the big question on everyone's mind has to be, how on earth did it do that?
Okay, so to really get what the AI was thinking, we got to go back in time a little bit. Let's take a look at what the portfolio looked like before it made all these new moves. This is our starting line. So before the changes, the fund was pretty heavily concentrated, right? Just 7 stocks. And you'll recognize all of them. We're talking the heavy hitters, Microsoft, Amazon, NVIDIA, the usual suspects. A really solid base for sure, but clearly the AI thought it was time for a change.
So, that leads to the question, how does this thing actually think? It's not just some black box spitting out random tickers. No way. There's a real structured process behind it all. It's basically designed to act like a whole investment firm, but, run completely by an AI.
It all boils down to this 3-step pipeline. First, it's like having 1,000 analysts working 24/7, just scanning everything, news, data, sentiment, to come up with ideas. Then, it pulls all that info together and starts connecting the dots, looking at the big picture, the company's specifics, the risks. And then, the final step, the CIO decision engine. This is where the magic happens. It makes the final call on what to buy, what to sell, and exactly how much skin to put in the game.
Okay, so all the data's been crunched, the analysis is done. It's game time. The AI's chief investment officer steps up to the plate. And on March 3rd, it decides to shake things up by adding 5 totally new companies to the mix.
And here are the picks. We've got Broadcom, AMD, Dell, Quanta Services, and Eli Lilly. Wow. That is a really interesting list, right? You've got hardware, you've got infrastructure, and then, bam, a giant pharma company thrown in there. So the billion-dollar question is, why these 5 specifically? And this is the really cool part. We don't have to guess why. We can actually peek behind the curtain and look directly at the AI's own notes, its memory logs. The system literally writes down its own investment thesis for every single move it makes. Let's start with Broadcom. The AI's logic here is that they're a top dog in custom chips and the networking gear that's absolutely critical for data centers. The bet is pretty straightforward. As the huge cloud companies, the hyperscalers, keep building out their AI capabilities, they're going to have to buy more and more stuff from Broadcom.
All right, next up, AMD. Look, everybody knows NVIDIA is the king of AI chips right now, but the AI sees AMD as a powerful number 2, the second echelon as it puts it. It's basically a bet that this AI chip market is going to be so massive that there's plenty of room for another big winner, and AMD is perfectly positioned to scoop up a big chunk of that growth.
And then there's Dell. This one is a super direct bet on the AI hardware explosion. The thinking is simple. You need powerful, specialized servers to run AI, and Dell makes them. The AI is actually projecting that Dell's AI-related revenue is going to double. That's the bet.
Okay, now this next one, Quanta Services, is my favorite. It just shows the AI is thinking on another level. It figured, hey, all these giant AI data centers, they need an insane amount of power. I mean, a mind-boggling amount. And guess who builds the power grids to handle that load? Quanta. This is a classic picks and shovels play. Instead of betting on the gold miners, you bet on the guys selling the tools. Brilliant.
Last but not least, Eli Lilly. This pick is so smart because it shows the AI knows how to diversify. It stepped completely outside of the tech bubble and honed in on a totally separate megatrend, the supercycle happening with GLP-1 drugs. The reasoning here is all about the numbers. The AI is forecasting absolutely massive earnings growth for them over the next few years.
So, there you have it. The AI kept its original 7 big tech names and then layered in these 5 new, super strategic picks. Let's put it all together and see what the final portfolio looks like and, more importantly, how it all ties back to that incredible performance we saw at the very beginning.
And here's the final lineup. We've gone from 7 stocks to 12. It's still a pretty focused portfolio, but now it's way more diversified. You've got exposure to the AI platforms, the chip designers, the server makers, the essential infrastructure, and even a non-tech pharma play. It's just a much more well-rounded and, frankly, robust portfolio.
And that, my friends, brings us right back to where we started. It was these 5 specific decisions, adding Broadcom, AMD, Dell, Quanta, and Eli Lilly, that are the reason for this incredible performance. Let's just say it one more time. A 17.4% gain while the market did 4.4%. There's no other way to say it. The strategy worked. Big time.
So the AI has made its move. The results are in, and they speak for themselves. But here's the thing about the market. It never, ever stops moving. It's always changing. And that leaves us with the most important question of all. What's it going to do next?
Hey, thanks so much for watching this breakdown with us. If you're as curious as I am to see where this whole experiment goes, you know what to do. Make sure you like and subscribe because we are going to be following every single move this AI makes.